Good morning, everyone. It is Wednesday, October 6th, and this is Nadex Morning Analysis, where we look at hot spots in the markets or potential hot spots in the markets for the day. My name is Todd Rich. I'm with Nadex. With me from Keep Trading Simple is Brian Caprice. Brian's back. Look at that. He took off his ghost costume. We can see him today.
Today, yeah.
Today.
Just for today. It may be back tomorrow.
Before Brian and I jump into the hot spots, I do need to share the disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So, what are we looking at today for hot spots in the markets? First, I'm going to bring up the Daily FX website and remind everyone, number one, we have oil inventory report this morning, 10:30 Eastern. It says 9:30 here because I'm in Central Time Zone. I got to figure out how to change that to the Eastern Time Zone so you see that. But 10:30 Eastern. We
You could
also
move to
had.
Eastern. You could
Yep.
just move, Todd. Just go to New York.
I could do that.
Pack it up and move.
And then, so we are going to be looking at oil. And in fact, I'll bring that chart up in a second. We're also going to be talking about equities. And we did get the employment change from the ADP numbers this morning, and there are more people on the payrolls. In fact, almost 140,000 more. Actually, it is 140,000 more than what was forecast, and way higher than what was than the last number. So this is actually all boding well. We are adding people to the payrolls. So this is good. Now the markets did sell off during the European session, and they are starting to bounce back. So we are going to talk about oil, which has been bouncing around and been very volatile. Before I flip it over to Brian, I did want to just quickly show a picture of. Here, we'll start with the Nasdaq because I think I still have my chart yesterday. Yeah, and we can see it had sold off over the European session, and here we are coming back. Sort of a pattern that we've seen this week. Starting to repeat itself. So, Brian, let me flip it over to you. We can cover oil first, get people set for that oil inventory report, and then we'll jump over to the equities.
Yeah. Yeah, okay, I guess we'll do oil first, and then we'll come back to the ADP employment change. So crude oil today, obviously, is a big one. You can see right now, and I mentioned it yesterday, we did not have a forecasted amount. They're saying, again, Forex Factory is now on board that it is going to be a surplus. And if we looked yesterday, I said, watch out for that, the overnight, the API number. The API number also came in as a surplus. So that would be 2 weeks in a row. So we've seen oil prices continue to rise. Last week, we had a huge surplus. This week, even with the adjustment, they're saying that there's, again, extra oil again. Magically, it's everywhere. And on top of that, we have Russia now talking about how Putin is saying that Russia is ready to help stabilize the energy markets.
Sure.
I mean, Russia is part of OPEC Plus, who just decided not to raise the supply to keep it the way that it.
Trust me, the check's in the mail.
I don't know. Yeah, so I don't know. I'm not exactly sure what he means by stabilize the energy market, because he's one of the main power
reasons
people
why we've got this going on.
Right. I don't know, but you know what makes me even more angry? He says stabilize the energy markets. Maybe he doesn't mean gas. Maybe he means natural gas.
There we go.
Hey, it could be. I don't know. I mean,
maybe
again, the United
get
States
that
and
relief
Russia
you're
are
looking
both.
for.
Yeah, I mean, the United States and Russia are both they're the two big powers as far as natural gas goes. So maybe that's what he means as far as stabilizing it, because he sees that it is too high. But anyway, having that API number come in the overnight in a surplus, or yesterday afternoon with a surplus, is great. If you look at the oil, markets, basically it really didn't do much, and then kind of shot up right before the European session. As you guys can see, the European session has done nothing but really shoot it straight back down. And you'll see the blue box is, a little bigger than what we've seen in other boxes. So the question is, has the market already really absorbed that number? Like, is it ready for that number? We are pulling back to a level where we have seen some basing. We have seen, prices bounce off of this level previously in the past. That's the only concern is, did the API take all the energy out of this one and kind of steal the trade from us? Now, it didn't quite make it up to 80. We talked yesterday about how 79 was kind of a big number, and we spent a lot of time right around that 79 figure. we got up and we got within 20 cents of that $80 figure. Before turning, and literally, this is just another one of those examples of like, when did the market move? Well, the market moved as soon as the European trader stepped on board. So,
Yep.
got to watch that. Now, again, if there was no oil inventory or anything like that today, in looking at this right now, seeing the price in one session where there's no, again, oil is really considered more of a U.S. commodity. Shooting it straight back down again into a level like that, you would say, this is really more set up to go long today off oil. Now, I don't want to see oil go higher. I think 80 is a little bit too much for where we are. Again, it's where the economy is either rolling or we're in Delta still. So, I mean, pick one of the, pick one. It can't be both. I feel like that's kind of what we're playing right now. Oh my God, there's so much supply, but Delta,
Right.
it's one or the other. You can't play both sides. Like I feel like the media is hijacking this one. But I will say, based off the movement we saw on Monday, again, this is OPEC, this is Russia saying, yeah, there's a possible short trade in here as well. So it's a little bit early right now, but we can see it kind of pulling in because we had this level of basing and it's hit it again. We're technically coming up to that kind of fourth hit of that level, and you guys know how much I love when things break through on that fourth side.
It's maybe that might be the one that goes through.
Yeah, and when you look across, this is where we should be taking profit, right? That's where the really start, like the origin of that true move is, and it's beyond. It's actually right there. It's actually beyond the 1 to 3. So as far as our specific trade rules and parameters that we're looking for, again, if it comes to this area and starts basing sideways, this is technically one of those areas where, hey, listen, we'd be looking to go short. Now, remember, this is on more of a kind of 4-hour/30-minute analysis. If you guys watch the recent economic summit, or not economic, we got ahead of ourselves. The education summit that we went to, I talked about the news trading strategy for this. Obviously, it's on much shorter time frames, 35 and 1 versus 30 and 4 hour. So you got to kind of dial in there, and we'll kind of see what it looks like later on today. And if you didn't watch it, you got an hour and a half. The presentation was only 45 minutes. You have more than enough time. If Tao was my best friend, he would link it right now onto YouTube so you can all click it so we can get some more views on it. Because that's what we do on YouTube. You look for
I'll dig that up and I'll drop that into the chat here. I know I can dig it up.
Find it right now. Every single person, click it. I want to see it fit. No, I'm just kidding. But again, the strategy is in there if you want to review it really quick. Again, there's probably 15 minutes on the strategy at the very, very end, as well as if you guys haven't signed up for a mentoring session, it is in there as well. But this is the type of basing we're looking for on a technical basis. Drop it down to the 35s and 1s. You've got to check this one out. API, I love the fact that it is a surplus again. I love the fact that Russia is now chiming in saying, yeah, we'll help with energy. It's like, you're the cause of it. But I like how this one, and again, this would be a break of 77.44 with a potential push down to 76.50 or 76.30. So about 90 cents worth of movement to that one. Could it do that because of the inventory report? Absolutely. Absolutely. Typically, the oil inventory report is worth about 120 to 130 cents. So there you go. Todd just posted it in there.
So there you go. It's over there in the chat.
I want to see the views going bing, 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 and make sure you like the video as well.
And
that's
share
what
it with
people
all your
on YouTube
friends.
do. And send it to all your friends. Yeah, that's what my kids say. Dad, how many likes do you have? So
your whole value, all of your worth is around likes.
I have 11-year-old kids. They're like, wait, you stream on Twitch? I'm like, I do stream on Twitch. It's not video games. It is, market analysis. And I'm on YouTube as well. They're like, really, Dad? How many likes do you have? So yeah, my level of coolness is depending on how many likes the video gets, guys. So help me be a good dad and like the video, right? But yeah, but this is right now we're going in the session with again, there's a lot of factors. We're down 1.2%. Typically we fight back against the Europeans and we send it higher, but again, that API number is justifying this move. Question is, did the Europeans steal it? Is this an opportunity to go long? That's where we're going to be dropping to that 35 and the 1, and we'll kind of see what we do at the open.
All right, so let's go ahead now and jump over to those equities and let's take a peek. I like. I'm just going to bring up the quick chart of the Nasdaq again, only because I put this on yesterday with those Fibonacci retracement levels. If we go to equity indices, I could go all the way down here to Nasdaq, and let's bring that chart up. And those levels, I mean, this is Fibonacci for this week, and it has been some of these levels have been important levels to be paying attention to. It did. I mean, we sold all the way up. We did come all the way back and a little bit. We did manage to just get above where we had started the sell-off, only to come all the way back down to the 23.6, the 24% level again. Here we are creeping our way back up. We did get that good news on the ADP, so I see no. I'm
ADP
not
is all
quite
positive,
certain why the
you know.
European session pounded this down today, but they did.
hmm Well, if you want to buy something, you want to buy it when it's overpriced or when it's on sale.
Yeah,
You want the price to go down so you can get in there to buy it. That's what makes sense. But yeah, so there was a slight adjustment. Last time it came in at 374,000, which was a big disappointment. It actually was worse than we expected. It was actually only 340. So there was a slight adjustment down by 30. But again, the fact that it made it was 140 something above. Again, being 100,000 more jobs, I mean that's quite a big bounce either way. So again, it's a very very positive number. Again, it's private sector; it's not government numbers. Combine that with yesterday's, I guess what, 16 months in a row of services growth. Again, these are really, really good signs for the economy. I mean, we're tapering. Inflation is transitory, supposedly, allegedly, whatever you want to say with it.
I don't know what
But
that means
all,
anymore.
yeah, I don't even. I sent an email to Webster and I told him, hey, listen, I think you need to update this. I even went and checked Wikipedia, and they didn't give me the right answer either. So I don't know. Uh, but um, but yeah, so this is a great number. Overall, this should be really, really good for the markets. Again, talking about stabilizing the energy markets, these are all positive factors. There was a couple of headlines that, again, right now, if you're looking at any of the indices, they're all more or less down. They are rallying back, though. And again, that rally starts at about 5:30 seems to be the magic number where all these start to roll. Now, it doesn't matter which one we look at. This is the ES. I can go to the NQ. It's the exact same picture. I can go to YM. It's the exact same picture. I can go to Russell. It's the exact same picture. They all have this level of basing that occurred at about 10 o'clock last night. And literally at 3 o'clock in the morning when the European session started, every single one of these shot straight down. Now, it really doesn't matter which one we go to. They're all kind of in the same area. They did kind of turn and roll in really kind of like a muddled sense. Remember, when you're looking at these, I would drop them into a 15-minute time frame. Look for areas of basing. Now, right now, pulling up ES right now, you can see that we do have a little bit of a hidden zone. I'm going to steal this from yesterday and put it sitting right there. Looking at that level, if this was any other time frame, I'd be saying this is a potential area to take this short. Now, the numbers will justify good, but remember, everybody can see that the numbers look good. So if everybody's trying to buy it, who do you think's on the other side of that trade? Is probably big money because they're willing to give it to you. So I would say right now, I mean, again, we have 3 candles to print until that time because I am delayed by 10 minutes on this chart. Right now, I would say we're kind of setting up more for a short at the open today. Now, does it have to be short all day? No, absolutely not. Remember, we're looking at a 15-minute time frame to take advantage of that initial push. Again, remember yesterday we had the huge push. I think we drew this one, right? We've been talking about that hard trend line, and we pulled back. And I said, yesterday the message was, I'm looking to pull back on every single one of these indices, right? If they all pull back, there's zones just right below where we are. It doesn't matter which one. You can see this one pulled back. The original level we talked about was here, and there was a huge explosion. It moved like 15 strike prices through on the shorter duration contracts. Here's YM, same exact thing. There's a little level right here where we had some problems that's been tested. Kind of the same scenario, a little bit short at the open. Same thing here. This one actually may go just a little bit higher, although there's where kind of your piece is. But you guys see every single one of these, it doesn't matter what I draw. Looking at the VIX, again, VIX is volatility, right? When volatility goes down, that tends to be positive. Now, again, there's a bit of a gap. We pushed all the way down yesterday, gapped up, and now it's starting to push back down, which again is showing us that, listen, the markets are going to go higher. When volatility disappears and when the VIX goes lower, that tends to be good for the overall indices. But we are pushing into a gap, and there's a couple other things there as well. So a lot of things in play. I would say right now, again, here's another one. You can see it right there. They're all about the same. If we get an initial push higher, remember the Europeans didn't do anything, and the Europeans all came in just a bit higher. I'll go through all of them real quick. ES is really kind of up in the 43.13, 33.15 range. Seems to be where if we can get an initial push, I'd be looking for potential rollovers. NQ is in a similar situation, probably up at 14,587. YM, if it's able to clear this first area, again, kind of the same scenario at 34,103. And then the Russell, kind of the same thing. We got a little bit of a test confirmed right here, sitting at 2211. Well, 2212. I'm a little bit off right there. All right. So they're all kind of setting up the same way on a 15-minute basis. They all look like they're going to pull back a little bit. But we'll see what happens in the next 30 minutes. That's really the true key of where we're going to go with these. But again, short duration contracts. Short
Yep.
duration contracts.
And remember, I did put it up there, although I didn't spell remember correctly because I'm trying to type too quickly. We do have the
A
non-farm
sign that you need
payroll.
more coffee.
Yeah, non-farm payroll. Well, it's so hard to see this on the small screen. Need a
Hmm?
bigger screen. We have non-farm payroll and unemployment rate in the U.S. this Friday, 8:30 a.m. Eastern. So right before Brian and I go on, we will be talking about that tomorrow morning to make sure that you're set up for it, because Friday it's going to be the talk of the day. Everyone's got their eyes looking ahead to see how that number matches up with what the ADP numbers are that we just got today. All right. So with that, uh, any questions for Nadex, please email us, customer service at nadex.com. Any questions for Brian, you can email Brian at support@keeptradingsimple.com. Brian, do you have anything else you wanted to put out there for the day? I think we covered oil.
That's
We
pretty
do
much
have
it.
that.
Yeah.
We have that oil inventory report,
Mhm.
10:30 this morning. So be sure to be at 10 a.m. Start checking out your 30-minute charts, and as you get closer to the number release, you could drop down to 5 and 1 minute charts, looking for breakout in those binary options and those shorter duration binary options. If that number doesn't come in, I mean, we could see some volatility there. With the ADP number coming in, and we're adding jobs, more people are getting paid, or at least adding people to the payroll. So I'm assuming that's more jobs. That's actually pretty good for the economy, right? We got more people working. So watch the equity indices. There is definitely some volatility in there, and we'll probably see some more volatility going through this week, particularly with the non-farm payroll and the unemployment rate coming out in a couple of days.
And don't
They
forget,
don't.
natural gas down 3.6%.
Oh, there we go. Natural gas is even bouncing
The
around.
one
There's
big
volatility
positive today.
there.
It's still
So
above $6, so let's not get too excited, but it is down 3.5% so far today. So
on the trading floor, we used to call October Rocktober, just because the markets would rock. In fact, historically speaking, October is the worst month for the markets, and everyone would always talk about, oh, it's September, September. No, it's October, and that expectation that we're going to get all these adverse moves in the market sort of has people on edge, and it does create volatility. But what that does do is create trading opportunities. So uh, trade safely out there. Nadex products, all defined risk, defined reward. With that, Brian and I will catch you again tomorrow morning, and good luck in the markets, everyone.